Hey everyone, welcome to Fly Academy. I'm Yusha, and today we are starting a journey into the world of accounting from the very basics to the advanced stuff. If you have never studied accounting before or just want a quick refresher, you're in the right place. This video is all about introducing what accounting is, who uses it, and why it matters. So let's get started. First of all, we'll be discussing about what accounting exactly is. So, in simple words, is the process of recording, summarizing, and reporting financial transactions. So think of it like if you run a lemonade stand and you'd want to know how much you spend on lemons and sugar, how much you earned, whether you made a profit, that's accounting. So we actually try to calculate out how much we are putting in. So that is known as an investment. And then how much are we gaining out of it? The gain is the revenue which we are generating. And then the leftover, when we find the difference among it, we say it's going to be our profit. So these are the three basic terms upon which accounting stands. So again, accounting is just to record, summarize, and report financial transactions. Now, as we're doing it, I'd just like to give you a tip. Whenever you're starting in with accounting, don't try to jump in into complex terms. Don't try to jump in and think of it as something very big and very complicated because it's not. You just have to think of yourself doing daily chores and how you use accounting in your daily life. Let's say even if you're trying to pay up your credit card bill, or even if you're debiting out some money from your account, or if you're earning some profit on your savings account. All of that is accounting for a simple man. And we use that and we do that on a daily basis. We budget our things out. So, budgeting again is a type of accounting stuff which we do in our daily lives. Now, the reason it just matters is it helps people make better decisions. So, let's say if you plan out onto a budget, you get like about $1,000 a month, assuming $1,000 a month. So you decide out, all right. So what I'm gonna do is I'll spend approx 250 on my foods and drinks or any other activities related to food, and then I'll save up about $100 a month. So that's going to be your savings. And then again, on the third part, you might be living off on a rental property. So you might have to pay up for your room that costs you 500 a month. And then whatever is left over, you utilize that and make the investments. So now, can I say that we have actually budgeted everything out, or we have tallied everything out and made it in a written paper, in a written format that just gives us a better planning, and with that, we have got a better management. Now, all of this management, the planning part makes you get to better decisions. You have got to a decision where you're saving up $100, where you're investing the rest over amount, you're doing whatever you'd like to do. Now, all of this comes in your decision making part. Let's for suppose $1,000 isn't enough for you in the first month. So then you will decide on to taking a new job, which might pay off like a $1,200 per month or a $2,000 per month, which comes in to the account with your expenses. And that is how you made a decision for yourself using the accounting method of decision making previously by budgeting your things out. Without it, no one would know if a business or anything is doing well or heading towards loss or profit or even a break even. So this is why accounting is important, not just in corporate agencies, but even in your daily lives. Now moving off to who uses accounting. Now, I'd say accounting is used by everyone, every single person on this living planet. But mainly, the two types of users are the internal users. Now, internal users are like your managers, these can be, or the business owners, or any, like it can even be an entrepreneur, all right? Anyone who use it to make daily decisions. So that is your internal use of accounting. And then comes in the other part of accounting that is known as the external use. Now, external use of accounting is mostly done by investors who are looking into companies to invest in to get better returns. We have got banks, we have got our government use. Government usually uses it to assess the performance and the risk. They try to budget things out on an yearly basis, calculate out the inflation. All of this is used through accounting. Now, moving off to a few terms which you might come across as we move off in our course. The first one is known as assets. Now, asset is anything that business owns. Let's say you have got a car or you yourself have a house. So both of these things is an asset for you, which is your savings, but savings that cannot be used readily. So anything that cannot be used readily and a business owns is known as your asset. So that can be your office building, it can be any vehicles, it can be any machinery that you might have, or anything like so. Now, moving off to the next term known as liabilities. Now, liabilities is usually known as anything that the business owes. Now, even if we're not talking about business and we're just talking about you simply taking in some amount from maybe a bank as a loan, so while you're paying it off, you count that as a liability because you have to give it back every month with some sort of interest as well, might be. Now, the same happens with businesses. They might, like, have to give off some money as a credit through like some purchases which they made earlier, or they might have to have some initial investment which they took in from the bank, or anything like so. Any debt is what the business owes. Now, that can be your debt, that can be any initial investment loan. Now, moving off to equities. Now, most of the times, as per my experience, I've actually seen students not being clear about what equity is. Equity, they usually mistake it with assets or with some other stuff, but in straightforward terms, it's just the owner share in the business. So it can be, let's say, you want to start up a lemonade stall. Again, the lemonade stall needs some investment or maybe two for of about $100. Okay, so this is your initial investment. Now, as soon as you put this $100 in, can I say that this is going to be your owner's share because you are the owner of the lemonade stand and you have put in some money into it. Now, whatever return you get will be on base of how much money did you put in back into the place. So that share which you will get as a return will be your equity that you're forming out. Now, moving off to the part known as revenue. Revenue is mostly the money that is earned from sales. So you can say it's just the raw money. It has nothing to do with any expenses at the moment. It's just what you're getting from sales. Now, considering the example of lemonade stand back in, so I'd say, let's say you sold off about some lemonade juice cups for about, you can say, $300 in like a day or two. So I can simply say that this is the money which you have earned. So now this money which you have earned is not including, or sorry, excluding anything which you invested in. All right, it doesn't include your product cost. So that thing is known as the revenue, which doesn't include the product cost, the advertisement cost, any cost that the business is bearing. Now, moving off to the expenses when we are talking about it. Expenses is actually anything or any costs that are incurred by the business. All right, let's say in simple terms, lemonade stall that you're owning, you have to put in some salt. You might be using your raw materials as sugar. You might be having some sort of lemons, some ice. It can be your water as well, your cups, all of these things, or even like the stand cost. Okay, for how much did you purchase it for? Now all of this requires some money that you're going to put in, and then make these raw materials into one product that you're now selling. So obviously, all that money which you put in to make those products are going to count as an expense that you are bearing. Now, moving off to what profit is. Profit, we usually say it's the net income which the company has made. So it's just your revenue minus expense. Now, you don't have to worry if you don't get all of this now. We'll break these down in future videos with examples for sure. So, just like a quick recap, we have got a few types of accounting. We have got a few basic terms that we need to learn about. I don't expect you to get all of it right now, but I just want you to have a quick review when we jump into our next video, which will be in more depth. Now, we'll discuss about the types of accounting. The first one is your financial accounting. Financial accounting usually just focuses on external reporting. You have got your managerial accounting. This just helps with internal decision making. And then you have got your cost accounting, which deals with production and cost pricing. Now, just these three things, you don't have to learn in depth about it. It just usually helps you in the longer run, but not initially. I don't expect you to get it at the moment. I don't expect you to know everything before our next video, which I'm going to put up. I just want you to, like, have a good know-how on how things are working around accounting. You'll become more familiar with all of these as we progress. Now, talking about what's next, in the upcoming videos, we'll break down the accounting equation, understand debits and credits, and learn how to record transactions. Eventually, we will be reading financial statements like a pro. So that's going to be our end goal of all of this playlist. Now, thank you so much for watching. If you guys found this helpful, make sure to like the video, subscribe to the channel, comment below with any questions or topics you'd like me to cover, and I'll see you in the next video. Until then, take care.